So lowest mortgage rates in over a year, or right about a year, that's going to be the headlines. That's going to be the news. And it's a great timing in the market because we obviously are in the height of the fall market. Kids are back in school. Labor Day weekend's over. So the timing is really good for buyers that have been waiting for this to happen. Now, rates will be in the lower sixes, which is great. 15-year fix, we've been pricing out in the mid fives. So really good development considering just a few months ago, we were in the 7% range. So big move, almost 3/4 of a point. So, but let's talk a little bit about strategy and also, kind of expectations moving forward. So today's number, unemployment number, was really important because, the market's been pricing in this rate cut for quite some time. And really today's number was really about not so much the rate cut because that was pretty much priced in. It was really about what's going to happen after that rate cut. And the news of the weakening employment picture and much lower job numbers today pretty much puts, we have 3 Fed meetings the rest of this year. So we have September, October, and December. Now, the market is pricing in. Now, there's a lot of noise after a Fed meeting, but right now the market is pricing in 3 more rate cuts between now and the end of the year, 75 basis points, so maybe 50 at one meeting, 25 at another. But right now, they're pricing in rate cuts between now and the end of the year at around 3 different cuts for a total of 75 basis points. Now, why that's important is because if the market expected the rate cut in September and not in October, market and the rates could have reversed after the Fed meeting. We've been talking about this. This happened in previous markets where the Fed lowers rates, but then after that, mortgage rates move higher because remember, the Fed does not control mortgage rates. They are controlling the Fed funds rate. That is what banks use to lend money overnight. Now it's indirectly related, but the market is always forward thinking. So they're looking what's happening in the future. So today's number is very significant for the idea that rates could continue to move lower. Now, how much lower? That's up for debate. I think there's a lot of concern still about inflation. I think there's a lot of concern about debt issuance and debt in the United States, and I think that will limit. It's something I've talked about a lot, how much rates can go lower. So as a buyer, you got to be strategic. And now in the height of the fall market, you're at the peak listings. It's not like there's going to be more listings through the end of the year because what happens is as the year tails off and kids are back in school, listings start to move lower. And we don't know what's going to happen in spring. So the fall is typically one of the better times to get an offer accepted as the weather's changing, kids are back in school, vacations are over. It's after Labor Day, from now until almost Halloween is peak fall buying season. So it's a great time to list your home, great time to buy, but you're going to start to see listings start to tail off. And if rates continue to move lower, the little amount of inventory that's out there, and again in Illinois, we're 63% below where we were in 2019, you're going to see that impact the amount of listings that are on the market. So great opportunity. If you purchased a home in the last 2 to 3 years, you may have some very good options to refinance. We're helping people with getting rid of getting rid of mortgage insurance, helping them renegotiate homeowners insurance. We have people saving over $100 a month from what their homeowners insurances have gone up. We're helping people get rid of PMI, going to a 25, a 20, a 15-year fix. There is a lot of opportunity for refinances for people that purchased over the last couple of years. So if you have questions about your current situation, you've been pre-approved over the last couple of years, you want to revisit your numbers, now is the perfect time. And the more work that you do up front, the more likely you are to get an offer accepted. Because remember, you're going to have a lot of competition as rates start to move forward. So we'll keep you updated. Lots of great news. Keep in mind on strategy moving forward, just because rates move lower doesn't make it easier to buy a home. If anything, you're going to have more buyers entering the market. So